Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So as we have discussed today, overall situation on the markets in a Forex video, the support has come from the nobody expected. So actually, this is the specific driving factors for lower markets across the board, including stocks market, Forex, gold. As you can see that dollar levels are becoming stronger. Correspondingly, the dollar is becoming weaker. Additionally, some liquidity problems is improving, it's resolving. So let's market to turn to some other assets to consider. If previously it was mostly focused on grabbing as more dollars as possible, resolving some problems, watching for a bond market and so on. Currently, as you can see, some relief is coming. Why? First of all, we already mentioned that. Now, a Telegram channel, we have put information on the Japan intervention. So Japan has to support national economy, Japanese yen from the really outstanding collapse. So, and they will have to, and now is actually selling its foreign reserves. How it usually happens. So they have the big reserve in United States Treasury bonds. They will have to sell it. That pushes, by the way, the interest rates higher. And additionally, they're getting dollars and sell them on an open market to support the Japanese yen. Now China is joining the Japan because we mentioned a few weeks ago the legislative act from the Joe Biden administration, as you know, that forbids the professionals in the microelectronics sphere to work in the Chinese companies. So they have to make the choice: either they keep working there, but they could lose the United States citizenship, or they have to resign. So this was the first bell of the coming changes after the victory of the Xi Jinping in the recent elections in the party. So this becomes evident that the situation and mutual relationships between the China and the United States hardly will improve in the nearest time. The Chinese economy is becoming more close. Less evidence come from the statistics, from the different data. So this is not really inspiring the international investors, and they start leaving the Chinese economy. So you can see massive sell-off on the stock market yesterday and day before yesterday. Chinese yuan has dropped actually to the lowest level since 2007, and it was pegged by the public bank of the China to dollar. To keep pegged ratio, Bank of China also has to sell its own foreign reserves, United States dollar, and accumulate all the supply of the yuan that's coming from the international investors who are leaving Chinese assets. So that additionally brings more dollars to the market, makes them cheaper, and you can see what's going on currently. Well, all the stuff really great. The only problem we have with it, we do not know the particular moment when it will stop, and it probably will happen suddenly. So this, because there's not some lasting fundamental process. This is just technical issue right now that supports the market. As it has appeared suddenly right there, and so you could stop suddenly as well. So that's the big problem. Although the overall rally here looks not bad actually on the gold market and other markets, on the high time frames it's still, well, it's not possible to say that this is really a major changing, because Fed still stands on the way of the rate hiking. If you take a look at the dollar index, you could see, yes, market is bouncing down from the top, which corresponds to current situation. Technically, it is absolutely reasonable. As I said in today's Forex report, it hits the XOP, this large pattern, this weekly chart, guys, by the way. Butterfly has been completed, and pullback is absolutely reasonable. If even it will be 30% pullback right there somewhere to the 105 level, it also will be, well, nothing really dangerous will happen. This is just 30% retracement of the long-term rally that lasts almost for a year. And take a look, current drop on the dollar index, well, it is not really significant. It is in the same way as it was previously here for the multiple times. So here's actually dollar repeats harmonic swing. And it totally fits the idea of the bullish trend that we have currently. So currently, that's why we can't speak about some big changes, fundamental changes on the global markets. Probably we should better treat it as a technical moment, but still, it's very good and, well, interesting and pleasure to follow it on to the upside. From this point of view, as we know the fundamental background, we know that why this is going on, we probably should, well, suggest that this grabber will not work. Yesterday we haven't got the grabber, although it could be formed. Market close above the MACD. This grabber probably also will fail. It's really big chance exists because this is really support of the Japan and the China of the selling dollars, and it probably will continue. So on the 4 time frame chart, as a result, here nice. Currently we could absolutely clear to see the hand and shoulders that we previously discussed on the hourly chart. Now it's absolutely evident on the 4 time frame chart as well, and we could set the target based on this pattern. So we would like to, you could place the slope neckline, something like this. So this ABCD pattern, the target of the hand shoulder stands at around OP. Market has broken 1660 confluence, which is also confirms the bullishness currently. This here right fast and acceleration with the reversal bar from the predefined levels we discussed it. And take a look, market is coming challenging. The neckline and target of this pattern is OP around 1690, which is, well, very close and agrees with the 618 level 1685. So that could say that 1685, 1690, this will be next destination point in the gold market. On the hourly chart, you could see that level that was vital for the bullish scenario. We said you could buy, but keep an eye closely on 1635. This will be vital for the bullish context. Market has to hold it to keep the bullish context. So this is great level for placing stop and so on. So you can see it's working nice. Now market stands in upper direction. If you haven't taken the position here, you still could consider possible taking the position. If, for instance, market will show some minor bounce out from the neckline. Here, by the way, we have minor hand shoulders as well, you can see. Just put here the levels, choose the nearest one. Either it will be the 30% or confidence, but it's more probable that's better to choose the nearest standing support if you would like to take the position. Place the stop corresponding depending on your assets. Maybe below these lows, maybe below major lows, because for the hand shoulders this is major invalidation point. And then keep watching. Of course, we can't consider currently any bearish positions by far.